I think that big idea is that content has, or like, any form of media on the internet has some kind of fundamental value, and you can use crypto to discover that value with open markets.
This episode is brought to you by Aries Markets. To learn more about Aries Markets, follow the link in the show notes below. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. Today I'm joined by Jacob, the founder and CEO of Zora. Yeah. Welcome.
Hey.
Hi. First in studio podcast ever, saving the best for first. Guest wise here, so
yeah, it's amazing. Yeah, I love the lights, cameras, everything.
Yeah,
it's real.
And this will be really good. And we've got a lot of ground to cover today. So I want to talk to you about Zora. And before we get into some of the weeds of this new app that you guys launched, I want to rewind the clock a little bit and get a little bit of a sense of the history of the company.
Yeah.
You guys have been around for a long time, and you've kind of seen different NFT metas through. You've seen the rise of meme coins, and you guys have built a very differentiated app with a super unique sort of vision of the future. And it's an idea that I've been getting sort of quietly obsessed by on nights and weekends. So maybe can we just start in general with a little bit of a history of Zora? Like, what were some of the early ways that you saw the NFT market and all that type of stuff?
Yeah, for sure. So Zora is 5 years old now, which is crazy. And it actually started as a side project in 2019 when I was still at Coinbase.
Yeah.
I got really inspired by the Uniswap project by the Uniswap team, which for those who don't know was basically they tokenized a pair of socks. There were 500 of them, and they launched them in a Uniswap pool, and then people can buy and sell them.
Yeah.
And it was kind of mind blowing to me because one, I was going deep on Uniswap as a protocol at Coinbase, and I was like, wait, you're telling me you just gave me the entire like superpowers of Coinbase in like one function call that anyone could access, and that was kind of like a light bulb moment for me. But it also kind of was this big hint towards a version of the future where we can start to apply all of these kind of financial markets to things outside of just like finance themselves. So
I have a funny story actually about Unisocks.
Oh yeah.
I don't want to blow this guy's spot up, but he's still active in crypto. I heard about this guy who was the founder of an early ICO project who saved the project by investing the treasury into Unisocks at the beginning of the run.
Yeah. Okay.
It's just so funny in crypto where every once in a while you see socks that get tokenized go from, $1,000 up to $15,000 a sock. And you're like, who is trading this? And it's some guy that's YOLOing the treasury of an early ICO.
Yeah, that's actually hilarious. I did not know that. So I had a riff on that project, which was like, okay, like what else could we start to tokenize that was in the world of like fashion or culture was kind of like the lens that I was coming at it from. So I built a project with my co-founders called Saint Fame, which was basically like, okay, I'm going to create like a streetwear brand and we're going to tokenize a long sleeve shirt that we're doing. We actually had a face mask just before COVID was a thing, which was like hilarious and scary.
Trendsetters. Wow, that's got to be a nice, getting ahead of fashion trends already.
Yeah. And I was actually coming at it from the DAO side at the time, which was, okay, if you've got this like permissionless market for goods, that means you can create a permissionless and community-owned brand on top of it.
Yeah.
But what was interesting is that no one really cared about the DAO, and everyone was really obsessed with the tokenizing goods piece.
Yeah.
So that was like the thread and the starting point for the first version of Zora, which was actually tokenizing physical goods.
Yeah.
And then this was in 2020, and we very quickly found that one, super rare and NFTs were starting to pick up, and that two, connecting the on-chain world to the off-chain world was actually quite complicated.
Yeah.
So we then moved into the NFT world. It was like, how can we help people tokenize their content, their media, their art, and everything all above?
Yeah.
And I would say the past 5 years has basically been this very consistent and somewhat squiggly journey of like, what is the most effective and valuable way to tokenize that content?
Yeah.
And have essentially been iterating through the market models underneath. So going from like one-of-ones and auctions to open editions and like open mints basically. And then also iterating through the user experience. So going from like a more of a marketplace context into like a social context.
Yeah.
And fast forward 5 years, we've kind of found that obviously the more liquid, the more open, the kind of more upside and the more growth that comes with unlocking that liquidity. So we've kind of been chasing and, iterating around how do we unlock that liquidity, and now we've landed on coins essentially as like that next phase as of a month ago.
Okay, I want to rewind the clock a little bit back to 2021 and 2022 when NFTs were really taking off. So I think that people who were around back then kind of have a vague memory of maybe something like CryptoPunks or Bored Apes or something like that running really hard.
Yeah.
And they think of NFTs as sort of one homogenous sector of the industry, but actually there were a bunch of different ideas that were coming together and colliding all at the same time.
Yeah.
And I think one way that you can look at NFTs and meme coins right now is actually the unbundling of some of those ideas into different market structures.
Definitely.
So at that time you had, as you mentioned, kind of this idea of tokenizing and fractionalizing real world assets. And this was actually an idea that existed pre-crypto. Obviously there were some pretty relatively successful startups I think around this, like Rally Road is an example of they started by tokenizing shares of kind of antique cars, right? For example. So you kind of had some people that approached the market from that perspective. You used to have a lot of debates as well in the NFT community about, is this about art, right? Is this like an art and collector type thing? Or is this a altcoins with pictures trading thing, right? Yep. And so this was exemplified by some of the different marketplaces that cropped up at that time. Famously Blur really pushed the idea of this is altcoins with pictures. And there was a big debate around royalties at that time as well. Like, should artists get royalties? And and then also, right, like one of the models that I think Zora has done a really great job of pioneering is, instead of these like smaller collections that exist today, like making NFTs, cheaper, increasing the volume, making more people collectors as opposed to very high value of a small group of NFTs.
Yep.
And so, I'm curious, when you look at all of these different ideas that kind of got bundled into this one sector, is it appropriate to kind of look at meme coins today as the extension of the altcoin with pictures idea? It seems like there's a little bit of a rebirth of collectors and the idea of royalties, which I know we'll get to talking about the Zora platform today, but that's coming back into vogue. Like, talk to me about the different, colors and flavors of the NFT market.
Yeah, I actually think they're more merging. I don't think these are necessarily at odds with each other.
Yeah.
I think they're different attempts at the exact same idea. And I think that big idea is that content has, or any form of media on the internet has some kind of fundamental value, and you can use crypto to discover that value with open markets. And I think in the earliest stages of NFTs, it was kind of like a great bridge to this moment because it was a little skeuomorphic. It looked and felt like the art world, which was, you could wrap your head around, okay, there's one edition or one NFT for this picture.
Yeah.
It's going to go up for auction. And then I'm going to be seen as the one person on the entire internet that is the collector of that thing. And, that worked at the time. There was maybe no more than 5,000 monthly transacting users for that whole era. That's across Super Rare, Zora, Foundation, any other of these marketplaces. But we were seeing multi-million-dollar sales in those auctions. And the fundamental limit that ran into was, one, there's only so many people who can pay that much money for a picture on the internet. And then two, there was actually a lot more demand under the curve where you would have so many people trying to participate and bid in that auction. And there was an artificial scarcity placed on that. Why is there only one of those? So one of the big jumps that we made was well, what if it's the moment in time that we use as the kind of scarcity and the constraint? And anyone for a day can mint that picture for $1. And that basically 100x the size of the number of people who were able to and wanted to collect. And then it started to tap into, well, actually that leads to larger holder bases, which means more of a network effect, which means more attention, which means more liquidity, and actually helping more creators essentially capture more value than they were even in the one-of-one format. So if you kind of take that thought train next, which was well, instead of it being a scarce supply for a moment in time with the open edition format, coins are actually a really fundamental user experience breakthrough because the secondary market for NFTs is extremely inefficient. So the way that we kind of arrived at coins from first principles was that we found that a lot of people wanted to collect some of the amazing content we had on the secondary, but it was very low liquidity, and then you required basically the seller on the other side to accept, and then there was a lot of negotiation around prices. But if you just move that to a coins model on a liquidity pool like Uniswap, anyone on the internet can buy any amount at any time, which is way more fluid, way more easy. And then kind of actually is a much more efficient market that can start to price it as well.
Was an early iteration of this maybe something like the NFT platforms like Blur or maybe Tensor on Solana? They allowed you to kind of bid, like do like floor sweeps in like a pretty automated way. Is that kind of
that was starting to get close. You could do like floor offers basically.
Yeah,
collection offers, which is like I don't care which one I get, I just want to get one of them.
So that kind of tells you that people don't really, these aren't like one of one individuals, and it's really important, which hoodie Tensorian or whatever people get. It's just they just want one of these things.
Yeah, exactly. It was like the floor was like fungible actually in practice.
This episode is brought to you by Aries Markets. Aries Markets deployed on Aptos in 2022 and is now the largest lending protocol with $280 million in TVL. To learn more about Aries Markets, follow the link in the show notes below. Today's episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger is trusted by 7 million users, secures 20% of the world's digital assets, and remains the most secure hardware wallet for your crypto and logins. Follow the link in this episode's show notes to grab your Ledger today. One other debate I'd be curious, I know we'll get into this as well, but I'd be curious to get your perspective on, because it's changed quite a bit, I think, over the last couple of years, is the royalty debate. So, I remember in the very early days of NFTs, before people really got their heads around how it worked on chain, was this idea of royalties for creators. And people were so excited about this that you could programmatically enable, royalties into the future that would go towards creators. And so it would fix some of the funding problems or the split that you see in the music industry or the film industry or whatever. And then everyone collectively realized that, this is actually not being enforced at the token layer, the smart contract layer. This is being enforced at the exchange layer.
Right.
And there were a lot of wars that ended up coming up around, especially around that time, like Uniswap and Blur. And you had the traders who said, we absolutely should not have royalties. And now I feel like it's coming back into vogue. And I know that's a huge part of the Zora platform today.
Yeah.
So, walk me through, when you were listening to that royalties debate at the time, what was your sort of thought process, and how do you think that the industry has evolved or they're thinking in that over time?
Yeah, I guess that there was like a beautiful 1 year period of time where it actually worked in that NFT construct. But as you said, it was enforced at the platform level. Yeah. And then kind of this arb opened up, which was, we can create more liquid markets by removing that tax.
Yeah.
And ultimately, like, people who are coming at these assets from the speculative side don't really care or want to honor that royalty system. They just want to get the most efficient price.
Yeah.
And then the market trended towards that model because it was actually more liquid and you saw more activity. I think like how it's coming back in a way that's like a little bit different, because now we're moving to this coin model where basically all of the liquidity is put in something like Uniswap.
Yeah.
That the creator essentially owns the starting LP position. So 100% of the coins go in the pool, and then it's a single-sided position. So as people are buying and selling with ETH, more ETH goes in the pool, and then that's basically starting the market. And there are LP fees that are generated from that.
Yeah.
So it's a nice iteration on the prior construct, because that basically exists by nature of the Uniswap protocol out of the box. So the only way you would be able to kind of undercut that as a protocol is if you remove that LP fee, but then there'd be no incentive to provide liquidity. So it's like, it's actually finding like a nice floor there. And no matter where the trades come from, you might have wallets like Rainbow, MetaMask, Phantom, Dex Screener routing those trades through the pool. They're going to go wherever the most liquidity is.
Yeah.
So if 100% of the supply is going there, at least in the early phases, the liquidity is going to be there.
Okay, that's super interesting. And that's roughly, maybe making a connection to the recent meme coin mania over on Solana. This is the Meteora model, right? This is, you launch this creator coin, you single-sided LP, and that's a way that you can you're providing liquidity, but you're also sort of monetizing and selling into the market.
Right. Yeah, that's right.
That's super interesting. And that feels so much better than, and I remember sympathizing a little bit more with the non-royalty side of it. I mean, ultimately, at the end of the day, it was going to be market-based. If you were a really strong creator that had a great collection, you could probably enforce that royalty.
Yep.
But now it always felt like a little bit of an annuity or something that would depreciate over time. And now this feels like a very sustainable sort of model.
I think it's one step closer. I feel like there's still a lot of open territory here to actually solve what like value capture looks like, because I think that that LP fee will, I think, diminish over time as well.
Yeah.
Especially in the success case, because then you'll have other people providing liquidity. So your
Yeah.
percentage of those fees will go down. Ultimately, I think most of the value capture is actually going to come at the coin layer itself.
Yeah.
And I think there's a lot of room for mechanism design for, it's like, well, how can we increase the percentage ownership that a coin creator has, but also give a lot of certainty and predictability to the market that they can't just like sell the whole thing in one clip and like, nuke the whole thing. And we can build smart contracts around that to automate it and make it transparent. So that's an open territory, but I think that's where it's going to go.
Okay, cool. I want to spend a lot of time talking about just the market structure of this in general, but maybe to try to summarize what we've discussed so far. And I want to get to a very critical point, which is kind of capital formation around, like NFTs and kind of content that's created online.
Yep.
So maybe the early iteration of NFTs, where these either like one-of-one collections or very low volume collections, right? Where the price got bid up, and even at the very peak top of 2021 and 2022 speculation, there weren't very many traders. And the Zora insight was actually there is much more demand for creators underneath the curve. It's just we need to find a better market structure and maybe allow people to enter at a cheaper price, right?
Yep, that's right.
And one of the, maybe I really like this idea as well of the market zooming in on kind of a skeuomorphic idea of, okay, these are pictures online. This must be an art market. But I think your guys' insight, which I want to, dig into here, is that actually there are other types of online content that get generated that might have value as well. Like the value of a social post might have value. And so maybe talk a little bit about kind of the evolution of this idea from, this is online Sotheby's into looking at the wider world of digitally native content that gets created and trying to create a marketplace that assigns value to that somehow.
Yeah. So I think the big aha moment and why we saw the 2021 mania was that actually you can tokenize pictures and you can buy and own pictures on the internet.
Yeah.
And that there is in fact crypto buy demand for that. And there's like a few reasons why like people come at actually wanting to buy, collect, or trade. Is like the NFT side has like art or collector style kind of characteristics to it, which is like I want to support that creator. There's like a patronage aspect. There's also a status component to it, which is like I want to be seen as the largest owner or supporter of this thing on the entire internet. And then there's also this more speculative or in market-driven side, which is playing kind of an attention game or an attention market, which is just like, okay, I think this image or this piece of content or video, whatever it may be, is going to get more attention in the future than it has right now. And now you actually have a medium which you can express that opinion financially. Where that used to be, I'm going to buy the NFT for this collection, off the floor, and I'm going to like trade the swings. And then now that's like almost certainly how a lot of like the meme coin market is showing up now, which is basically like people are speculating on the current and future virality of a thing. So they kind of like resemble attention markets in a way.
Yeah.
And then, I think like from 2021 to now, the market's increasingly realizing that it doesn't just have to be monkey picture. It can be any picture.
Yeah. Talk about this idea of attention markets in general. And maybe I would love to start connecting these ideas of NFTs and meme coins, attention markets, and social media.
Yeah. So attention markets, you can think of them like a prediction market. They're very simple, which is, let's say you've got a meme coin, and you can come at this from the perspective of there's a current market cap and current holder base, and maybe I'm tracking how far and wide this image is being shared on traditional social media. Given all of the above, do I think this is going to get more or less attention than it has right now? If you think that it's peaked, then you're probably not going to touch it. You're not going to buy it. You're going to look on the next one. If you think it's actually very early in its attention curve, then you may buy it if the market cap feels like it's suitable. It's all very like, it's kind of hard to pin exact measures between these two, but people kind of building a sense of like, how many views or who's going to share it is going to have what impact. But the attention market game is essentially, if you think it's going to get more attention, then you buy it. If you think it's going to get less attention or it's reached a peak and you already hold it, you'll probably sell it or you won't buy it at all. And it's very simple, but that actually I think is actually a pretty fundamental breakthrough for how we start to price and create markets around attention on the internet, outside of like ad exchanges being like maybe the closest analog that we have currently.
I like Okay, I want to return to the ad exchange
Yeah.
example, but let me just give what I think is probably first the knee-jerk reaction to this, and then we can break into, or we can delve further into why I think this actually makes an enormous amount of sense and is a huge breakthrough. What I would say, hey, this doesn't make any sense. Why should something, you're playing a game of greater fools theory, right? Where at least, traders in financial markets are assigning some sort of value to a thing, like they're getting paid to buy or sell and, eliminate inefficiencies and assign assign price discovery to a financial asset.
Yeah.
There are no cash flows to these pictures online. There are no cash flows associated with something like a social post or something like that. So how is this not just degenerate gambling?
So I think there is a lot of degenerate gambling in there. And then I think like the part of the knee-jerk reaction I'm very sympathetic to is that these valuations are probably orders of magnitude larger than they should be.
Yeah.
But the market, I think that's just part of the mania we're going through right now. What I will say is that, and this connects it back to like the NFT side of the spectrum.
Yeah.
There is some non-speculative demand that is growing and constant in the crypto world for basically the collector side.
Yeah.
Which is like there is a consumption or status piece to this, which is I just genuinely want to support that creator or I want to be seen as the owner or collector of this piece of content.
Yeah.
And then the kind of lines, there is a spectrum there where it's like in the same way people love flexing that they were early to like a certain album or artist or whatever, like you can start to play the speculative game on the status side as well.
Yeah.
But obviously crypto means that line with the financial piece blurs. But I will say that it's like, that is actually, I think that's like a very valid knee-jerk reaction. But I think part of it is because the valuations currently are way higher than they should be.
Yeah.
But content on the internet, as we know, otherwise social media wouldn't really be a profitable business, does have some non-zero value.
Yeah.
So now we're creating markets to discover, what that non-zero value is.
Quick shout out to today's sponsor, Aries Markets. Aries Markets deployed on Aptos in 2022 and is now among the top 10 lending protocols across all blockchains with $280 million of TVL. Aries Markets has expanded its product suite to become a fully integrated DeFi hub combining lending, borrowing, and more. In 2024 alone, Aries introduced several new features to better meet the needs of its users, including native USDT support, an incentive program, and more. Click the link at the bottom of the show notes, head over to Aries Markets, and tell them that I sent you. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional password management. Follow the link in today's show notes to get started with Ledger today.
One thing that I, when I'm looking at these different coins that exist, some of these meme coins, it feels to me like there are two different types of coins here, actually. There are creator coins, and then there are almost short-term meme coins. So an example of a creator coin would be a Trump coin. Like Trump is actually a creator coin. That is a coin that is associated with a specific person.
Yeah.
And, historically, I think people have a really negative reaction to these things because they've been, the vast majority, I don't know, we'll leave the Trump one out of this for a second, but a lot of these like celebrity coins, right, have been kind of grifty, right?
Yeah.
It's been like, hey, I have a lot of attention. I'm going to launch a coin, retail or whoever my follower base is going to buy it and I'm going to dump on them, right?
Yeah.
There's been a very negative reaction. I do think, though, you can squint at this and say, maybe a next generation of influencers will say, hey, I can launch a coin that will go up depending on how much attention I'm able to get on the internet and treat it like a real business, almost like equity in my, my ability to get attention. And so I think there are going to be these longer term creator coins, and that's an enduring category. But there are other coins which almost feel like, Harambe coin. They feel like a viral internet trend or something like that. And, I know everyone looks at these meme coin charts as going way up and then dumping as being bad. But if you were to look at them as kind of like that's what a social media trend does, right? It's supposed to go way up and then down.
Yeah, if
right?
you looked at the median view chart for any given piece of content, its half-life is going to look almost exactly the same.
Exactly the same as that, right? And so from that perspective, maybe the market is actually behaving exactly as it should, right? And what these traders are doing is, instead of a social media algorithm creating price discovery for that trend or that meme or that idea, you actually have traders that are creating price discovery for that meme and idea and saying how many people should see it.
Yeah, exactly. And it's not like a black box algorithm that we have no idea how it's working or what it's optimizing for. It's actually an open market in an adversarial environment with that, is starting to like genuinely price these things. I will say, I think there's way more than 2 categories of coins. Like I think there'll be, for every possible asset type that exists, online, offline, on-chain, there will be a coin for. So I think like, it's actually quite blurry. If you look at the meme coin ecosystem over the past year, yes, there's been creator coins. There's been these kind of like symbols or movements, so like Peanut and SPX that are kind of these like, they look resemble more like political movements than they do anything else.
Yeah.
You then have like AI agents as a category with its own user experience and its own kind of market forming around it. Like there's a lot of different types.
Yeah.
I think the market is going to get increasingly granular and specialized with those different categories. But the one I'm most interested in, the one we build all of our time around, spend all our time on, is just specifically content.
Yeah.
And I think like I do see the version of a version of the future where creator coins work, but I think we need to figure out how to tokenize their output on the internet first. Like instead of jumping straight to let's tokenize Mr. Beast, I actually think we need to effectively tokenize all of his videos first before we can then bundle and create a creator coin on top of those.
Oh, okay. Explain that connection exactly.
So I think like where creator coins struggle right now is that like it creates a lot of work for the creator to actually like put value back into it. And a lot of the value they're creating on the internet is like off chain. Or even like not even off chain, like in the real world. So like they're selling feastables or real world goods. And it's very hard to programmatically and publicly route that back into the coin. But if you imagine a world where every video is now being tokenized and we understand the value of every single one of those videos, there's buy and sell demand going through them. There are royalties coming out of them or LP fees or even just the coin ownership. You can then actually start to bundle, aggregate ownership in all of those things using what exists on chain versus trying to have this like blurry, we're selling t-shirts and pricing them in, the token. So I think like people are trying to scratch at how do we bring the whatever value that creator is doing into the creator coin. I think it's actually a little bit too early for it. I think the idea is right, but I think we need to actually figure out how to tokenize everything else they're doing first before we bundle it.
You know what is so funny? All right, I'm going to draw an analogy that feels like it's reaching a little bit.
Okay, let's do it.
But I was looking at a post today or the other day. Guy from Athena was describing that USDE or Athena drove 95% of the incremental demand for the BlackRock's on-chain treasury BUIDL over the last 3 weeks. And it hadn't really occurred to me and the analogy would be, okay, if you think about different issuing environments as like L1s, right? Or different issuing platforms, the closer the proximity is in between 2 different assets that want to interact, the better. So like, let's take the TradFi L1, where you have dollars, which are backed by banks that have treasuries and different fixed income instruments, right? But as soon as you bring the dollar representation onto Ethereum, there's a huge problem between the, the treasuries that exist in the TradFi L1 and what exists on Ethereum. And so what you're starting to see is issuers move a tokenized version of those treasuries on chain, so that it's easier to manage the risk and liquidity in between the stablecoin and what's backing the stablecoin.
Exactly.
And there's this is a little bit of a reach, but it's the exact same thing, right? In between a creator coin where, okay, let's say I issue this on chain, but I'm selling feastables or t-shirts, or I've got an offline coffee bar or whatever. So you really, as a collector or an acquirer, you really have to squint at how am I going to see value here, as opposed to if you have a bunch of tokenized posts that directly relate to this and it all exists on the same environment.
Right. Then things the value is more legible, but it's also more programmable and it can be automated. So you're not introducing all of this extra trust and labor involved that is just like, you could theoretically do it, but I think it breaks down. And then I think expectations get overinflated whenever there isn't, transparency or legibility in how it works. And I think that's where a lot of the failures have happened, where it's like, they're trying to underwrite it as if this person is now publicly tradable on the NASDAQ. when it's just not that.
Oh man, that is so interesting. Okay, so the value proposition from your perspective then, or listening to you, my conclusion is, because I'm like, what is it going to be? What is the catalyst here for creators to start adopting, to get off of YouTube or TikTok or wherever they're building these massive followings and monetizing very effectively is a better form of monetization ultimately.
Yes.
And maybe a larger global audience that you can monetize these assets to as well.
Yeah, and just fundamentally a more conducive value system for spreading information on the internet.
Yeah.
Like I think the like zooming all the way out big picture problem that we see is that like the internet up until this point, the best we've been able to do to capture value from information is either through ads or subscriptions.
Yeah.
And those both necessitate having some kind of wall around the content, which is like, then it's at odds with like one of my favorite quotes is Stuart Brand, like information wants to be free, but it's also expensive, and that tension won't go away. I actually think crypto solves that fundamental tension, which is you can have information that is free and open to the entire internet because it goes on a blockchain. Any developer can access it, and it spreads everyone gets access.
Yeah. And
then by putting it in this market format or in coins, there's actually now a direct incentive to spread that information as far and wide as possible. So I think I think that's why you might that's like really high level. But yeah, for creators, it's like, hey, like our pitch is so simple. Like we can DM creators on Instagram or YouTube, and it's like, hey, you should try tokenizing this on Zora.
Yeah.
It looks and feels a little bit like a blend of Instagram and YouTube.
Yeah.
And you don't need any crypto. You can just like sign up with an email and upload. And some amount of money may or may not come back. And then more often than not, they'll make more on Zora in like their first week than they have in years of being on Instagram or on YouTube.
Wow.
And that's for like a particular category of creator. Like we're not going for, they've got millions of followers and they have an institutional business built around this. It's actually the longer tail of people who are doing really high quality work, but are kind of in that like 10K to 100K messy zone where it's like on the side, but a lot harder for them to monetize.
Okay, let's compare this. And I want to start now getting into what Zora actually looks like today.
Yeah.
But the last macro point that I want to make a little bit is, this might sound a little high level or highfalutin to people, but if you think about the way that the internet is monetized today, it actually is monetized via ad exchanges, right? And so maybe could you just break down a little bit how that model works? Because actually the Googles of the world, right, and the Facebooks are very, very familiar with creating some sort of online exchange which prices the value of inventory, right? Like social posts. That's a thing that already happens. This is just a different way of maybe distributing the value, right?
Yeah, exactly. So like on Instagram, there's some of the world's highest quality content there that captures a lot of attention. And the way that they monetize that attention is they're essentially ad auctions running on an exchange in the background where people are paying to insert their content in a particular person's feed. And essentially they're like hijacking your attention, but they're like pricing it. So it's like, hey, if you want this to be viewed by 1,000 people or 10,000 people or 100,000 people, we know that that's going to cost, X cents per impression. And we're going to charge you for people who are acting on that. But there are these huge at scale, multi-billion-dollar exchanges running in the background that are constantly pricing and routing that attention based on who's trying to buy it, which are advertisers. And it's a pretty good system. Like I think it's got us, like I think the current state of the internet is actually pretty amazing, but I think like crypto is going to let us get like 10 times further than we have up until this point in a much more open model.
I'm not sure if you've ever come across this piece. I'm blanking on his last name. This guy Arnav wrote a piece on publisher exchanges, which is very interesting. The blending of these two worlds, right? And where already you see examples of exchanges of value. So like Robinhood's, like the brokerage models, melding with media, right? The acquisition of something like snacks, and actually Instagram Marketplace or TikTok are like good examples of even further, right? You can look at that. But Zora represents a really exciting end state of this. And, last on the macro point is that I think I could see in the future an Overton window shift of, if you just think about how media has evolved over the years and centuries about who gets to decide what information is shared. You can think about it as being, traditional media, the model is a very small group of editors, right? I mean, if you look at the media landscape of the US back in the early 1900s or early 20th century, there weren't as many different media agencies, and there was like one guy, and like Walter Cronkite, right, that would get on and essentially decide the ideas that got propagated to the American people.
Right.
Then you had dissemination of media. You have but even still, those are small groups of editors that are making these decisions. And then social media was very disruptive, where instead of people making those decisions, it was software developers in Silicon Valley that was spreading those ideas. But now, we're at this very divisive point in politics and geopolitics in general. And I could see people are always saying this is biased. This is not, Facebook isn't showing material for conservatives. Twitter is now a platform for conservatives. And there's always going to be accusations of blame or someone putting their finger on the scales. But in a weird way, a more fair way to disseminate information is markets. If you just make it open, like a markets-based attention algorithm.
Right.
I could see that really being a macro fit in this current era.
Yeah, it's certainly the ideal. And I think it's easy to see if you just assumed every piece of content had a live and open market on it, you can see how that could work.
Yeah.
It's just a matter of like, how do we make it easy and fun and compelling for people to actually tokenize their content in the first place? Yeah.
Okay. So with that as the super future, that would be very cool and interesting. Let's zoom in on what does Zora look like today?
Yeah. If you go like download the app in the App Store, it's called Zora. It looks on mobile, it looks and feels a lot like this kind of crypto version of Instagram.
Yeah.
So you open up the app, you see a feed of images and videos. People can comment on them.
Yeah.
But instead of seeing the number of likes and comments on a post, you'll see the market cap and the trading volume on that post.
Nice.
And then you'll be able to see who are the holders of it. Are some of those holders your friends or not?
Yeah.
And from the creator side or creating side, it's as easy as posting on Instagram. So we've done a lot of work. 3 years ago, you had to download an app, you had to buy ETH, you had to pay gas, and it was like the worst first-time user experience ever.
Yeah.
Now you just download the app, you sign up, and you press post, and you've just tokenized the thing on the wide open world of crypto. On web, it also looks and feels a little bit like Instagram. I would say the coin pages that we have actually feel a little bit closer to YouTube.
Yeah.
But we have kind of designed everything in this stage to be content first.
Yeah.
It'd be very easy for us to go like Giga Trader, degen mode, and hyper price charts everywhere and things going crazy. But I think like what we're trying to really establish in the market is this understanding that like this isn't some project. This coin isn't going to be like king made by some person who's going to have to spend their whole life, working on making number go up.
Yeah.
It's truly just the picture. So like, don't buy this thinking it's going to go crazy because, some magic's going to happen in the background. It's like the value of this picture is what we're trying to discover, and we're trying to build that context around it.
Yeah.
So yeah, we've tried to make it quite friendly, and we focus a lot on like just onboarding as many first-time creators as possible to crypto, because we think that like expanding the types of content and the supply side is one where we have just like natural strengths in with all of our work on the NFT side. But two, I think that's what interestingly, I think will create more traders, because I think there's a little degen in everyone. It's just that there's not always ways for you to express your opinions financially. So if we're starting to expand the amount of content and niches and subcultures that are now like showing up in this world, then we think that'll convert more existing crypto traders, but turn more people into traders for the first time as well.
That's really interesting that you guys are coming at it from everyone's trying to get the right form factor on this, right? If you speak to a bunch of early stage VCs and accelerators in crypto, or even outside of crypto, everyone is into this idea of gamification of trading. And the people that are more on the finance side of this call it gambling, right? But you can kind of squint at this and see a bunch of different, people are trying to create new and unique experiences outside of just logging into a brokerage app, right? They're trying to make it more interactive. And you guys are kind of coming at it from the other side of things, and you're saying, okay, this is what social media kind of looks like, but what if we added a little bit of a finance element and a trading element to it? And
exactly,
it feels like you're both going towards the same thing, just from different starting points.
Yeah, I think that's right. And we're also trying to tap into, that if you look on like TikTok comments or people going like in before viral or investing in 1,000 likes, like people are actually starting to already express that type of behavior on traditional social media. So it's like, and then obviously that's a great form factor to win a lot of content, win a lot of supply that feels familiar. But instead of it being a like button, it's like, well, if you double tap, you just bought $1.
Yeah.
Or you can like trade it. And I think there's a risk where you can go too far to the social side.
Yeah.
And I think we actually started there like a year ago.
Yeah.
We actually have been like going more and more trader focused.
Yeah.
But it's like coming from this like social core.
Traders, AI enthusiasts, and degens, listen up. The game is changing, and Desk is leading the charge. To celebrate their launch, Desk is running a trading campaign with 3 major highlights. 38% of their token supply will be allocated to airdrops. They're offering the lowest trading fees on Earth, and finally, they will be running a Desk referral program. The more people you invite, the bigger your rewards will be. To get started, click the link in the show notes below and make sure to follow at Trade on Desk. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today.
How does the market structure piece of this evolve over time? Because the criticism of meme coins that I think has a lot of legs is, I actually really didn't like this when there was originally meme coins where they were taking off because they were more fair than these low float, high FDV VC coins, and it was supposed to be fair and retail was supposed to win.
Yeah.
And probably that didn't end up happening in a lot of cases, but also the trading apparatus or like what was going on underneath on the market structure side of meme coins became professionalized very quickly. You had sniper bots that were sniping out, like basically maxing out the bonding curves of something like Pump Fun.
Yep.
And retail was generally losing. So how do you imagine over time, like what degree do you imagine retail people are sort of speculating on posts versus there's a more professional market making and trading apparatus that exists to price the value of these posts over time that retail can benefit from? Like how do you...
Yeah, I think, the best case version of the future probably finds some good relationship between both. Like I think, if we play out the market as the algorithm version of the future, it's probably going to be people who are running, what look like feed models on social media actually as trading models to be like, oh, I've seen this piece of content and I think it's going to reach this amount of people who are going to enjoy it enough that they want to buy it. Yeah. And like there will be a lot of, like I'd say probably be dominated by mostly machine-based trading, bot trading. But for that to really work, you need the consumer side to feel like it's a fair and open market and like they want to be able to buy and they're not going to just get their eyes ripped out, one block later.
Exactly.
Which I think is what's been happening now. The market structure currently is basically just like you have a bonding curve either on your own custom smart contract or you put it just directly into something like Uniswap, which is what we do.
Yeah.
But what we're really focusing on is the starting market cap you can do there is actually like still probably too high. Like the starting market cap we have right now is around $1,800.
Yeah.
We want to get that down to zero.
Yeah.
And then the challenge becomes like, well, how do you have a basically $0 market cap and then not make it free for someone to buy the whole thing?
Right.
And then this is where I think all the interesting mechanism design is going to play in, which is like, how do you have billions of these micro markets that maybe you're trading between 1 cent and $1 or $1 and $100. And there's a lot of work there. But I would also say like a lot of the problems now is I just don't think there's actually enough supply. So there's excess demand going into things that shouldn't be getting to it.
Yeah.
Which is just like why you see these huge kind of like immediate run-ups and things get ripped out because people actually just don't know what they're trading yet. They don't know if they're trading a project. They don't know if they're trading a picture. They don't know if they're trading some AI agent. Like that, I think a lot of that illegibility is just showing up in the market activity where people just genuinely don't know what value they should even be at in the first place.
There's almost a fundamental valuation question here of price discovery of what should this be.
Yep.
And then there's a whole market structure question here of what is the right mechanism design to ensure a decent outcome. And I would encourage listeners, if they haven't go back and listen to an episode that we did Did 2 episodes actually, one with Jesse Walden and Austin from Whetstone launching Doppler. We also did a roundup on kind of the mechanisms of Pump Fun, so we can link both of those in the show notes.
Yeah,
but
perfect.
yeah, I think I would love to get a sense of, what's the design space for this look like, and reading. We'll link in the show notes a little bit of some of the blog posts that Zora's written, which have been great for understanding. But you guys are built on Uniswap today.
Yep.
And what that reminds me of, and what might be familiar with some listeners, is this idea of what's changing right now. But initially, Pump Fun being built on top of Radium, or eventually routing trades to Radium. That changed. Now they have their own AMM Pump Swap.
Yep.
But talk to me about that kind of market structure and design, and like why build on Uniswap here versus building your own AMM or something underneath.
Yeah, so we actually ran an experiment end of last year called WOW. Once we realized that it was like, okay, moving from NFTs to basically coins is the move we wanted to make, we started doing some of this like market structure experimentation. And the first version we did was actually on our own bonding curve and our own protocol essentially. And what we found was the gains that you get in customizability, at least for the stage that we were at then, were offset by like how hard it is to just build enough distribution and liquidity out of the gate and the integrations you need. So like showing up on things like Dex Screener, being integrated with all the different routers and kind of APIs that exist that a lot of the wallets are built on.
Yeah.
And then Uniswap is actually like really, really good. Especially with,
surprisingly.
And with, so we're on V3 currently, we'll move to V4. But V3 basically gave us everything we needed out of the box, which was we could put, 100% of the supply into a pool. We could do a single-sided position, so we didn't need to actually add any capital into the market.
Yeah.
And then also by nature of it being in Uniswap, other people could start to LP as things grow very quickly versus in your own bonding curve.
Yeah.
Unless you want to build all of that logic, typically you're stuck and you have to live by that curve through the whole thing, which is, which can be a limiting factor for its growth. And then on top of that, it was just like, simple. It's just like simple to do that. So we were like, okay, maybe there is a version of the future where we need to get, increasingly specialized kind of like market models that push the limits of what you could do with like Uniswap V4. But it was like, this will get us started out of the gate. And then we also wanted to normalize the experiment for ourselves to some extent, which is we don't want to necessarily innovate too much on the market that the model that we can see is working. We're trying to innovate on the type of supply, the user experience, and everything on top of it.
Yeah.
So it just made it possible for us to focus on that part as well.
Okay. Question. What on so when you're doing the single-sided LP, that's whatever the creator token is, or that token that's being created is an ETH. Is that the other pair?
That's right. Yeah.
And is that something, as you think about expanding over the next like 3 to 5 years, do you think it's always going to be ETH, or would you see it pairing with USDC or something like that?
Yeah, I could see it pairing with USDC. I could see it actually starting to pair with other meme coins, or you open it up and people can start to play with like linking these to each other. But ETH was the easy starting point just because a lot of our minting UX and smart wallet stuff was built on ETH being the primary currency.
Sure.
But I could see USDC being a better one as well. Yeah.
That's interesting. That's interesting for ETH as a token and just L1 tokens in general. Because the same thing happened right on Pump Fun. It was Sol was the...
And now it's USDC.
And now it's USDC. Yep. Man, a little bit bearish L1s here. L1 token prices.
Yeah.
Okay, so you started on Uni V3, which introduced concentrated liquidity. Now we're moving to V4, where there's going to be a much more rich design space and much more heterogeneous group of AMM. So what will you be look like? What would be nice features, right, from a new AMM for you?
Yeah, so the first one is actually unlocking that lower market cap and like the lower part of the curve.
Yeah.
So instead of it being $1,800, it's like we get it as close to zero. And then
what is why is it difficult to go below $1,800?
Just because if we set it any lower, then you could spend extremely small amounts of ETH to basically buy the whole supply in one clip. There's nothing we can do about that.
Yeah.
So we've actually been working quite closely with Whetstone and the Doppler team on like iterations that get us closer to more efficient markets at that lower end of the curve.
Yeah.
Because not every picture is going to be worth $1,000 or $2,000, they're probably going to be worth a lot less than that.
Yeah.
And
then,
then,
what is the team doing exactly? I'm trying to reach back to that interview, but they basically are only releasing certain amounts of supply at a time, or
yeah, it's a little bit more complicated than that. It's kind of like this, the UX is still swapping, but it's kind of like a reverse Dutch auction in the back end that lets you can buy small amounts at low value.
Yeah.
But if the higher the amount, the more it's going to like up your price, and it's kind of like balancing the two. But like how that shows up right now is that they actually have multiple liquidity pools that you can get more granular curves. So instead of just being one curve for everything, you can have like, okay, here's what our curve looks like from $0 to $10 market cap. Here's what our curve looks like from $10 to $1,000 and stuff like that. You can get more granular.
Nice. Okay.
And then there's a bunch of like stuff they have to do around that to manage it all, which is like where a lot of the magic of their protocol is. But yeah, it's kind of like if you were to do a crypto native version of a reverse Dutch auction, it would be Doppler.
Yeah.
So that's what they're doing. And then like other features I think that would want to show up. So right now, LP fees come back to the creator in both the coin and in ETH. With like V4 hooks, you can do these things where it's like actually they could just pick a single currency that they earn all of those things back in.
Yeah.
So instead of getting like 2 coins showing up, and maybe you don't even want ETH, you just want USDC, we can start to manage that. Also for Zora's fees, instead of us like getting fees in all of these different tokens, you can actually collapse them into just one desired token that you'd want on the back end.
Yeah.
So I think like a lot of the LP fee management side is actually really interesting to me on the hooks side. But they get unlocked by Uniswap still. Like they don't need us to.
Right.
We have to write those, but like we don't have to build our own version of Uniswap to do that, which is great.
So I'm imagining being a creator here, right? At launch, I create some sort of token or content, and then I get entered into. I'm essentially an LP here, right? Providing single-sided liquidity. Going forward into the future, is there a challenge from I would guess that the UX that you want here is to make it as simple as possible for someone that has zero technical know-how to be able to manage this effectively, right?
They don't have to manage any of it.
Yeah.
So they just show up, they post, and then money just starts showing up.
Oh, that's great.
Yeah. So, and they get notifications where every time they're getting trades, we actually give them a percentage of their own coin for free at creation. So the value of that is obviously going up and down over time. But every time there's a trade, a little bit of money shows up in their app, which is great.
Who is tweaking the parameters on these LP pools? Because, I'm imagining my analog here is I'm imagining providing liquidity on UniV3, right?
Yeah.
Like there's a lot of analysis that goes into creating a profitable strategy as an LP there. It's actually famously pretty difficult to do.
Yeah.
So is it the Doppler team? Is it some combination of the Doppler and Zora team working together to make sure that it's working for creators? Or
right now it's just Zora.
Yeah.
Like we're brainstorming new versions like with the Doppler team because we're seeing this as like one of our local maximums right now. But yeah, right now it's just like our protocol team.
Nice.
And we've only got a month worth of data in this, but we've already made a couple of tweaks in the first couple of weeks that had a bit of an impact.
Is there opportunity here for a new class of market maker, sort of where, you have, right? I would imagine that this is not an area of the market that Wintermute looks at and says, I got to get involved in, assisting with price discovery on, tens or hundreds or thousands or millions of individual coins. But maybe I could see that this market hopefully it grows and becomes orders of magnitude larger, and there are many more assets that you have to keep track of, and maybe Zora doesn't want to keep doing that forever, but it sort of seems like there's a niche here for some new type of market maker to come in.
Definitely. And I'll say we don't actually have to manage we basically one-way deploy all of these pools, and then we just let the market figure it out currently. I think this new market maker actor that will emerge that you're alluding to was kind of what I was saying earlier about how there's like a category of engineers, ML engineers, who are really good at writing feed algorithms. Which is like, given a piece of content, who should I show this to and how viral will this be? And that's going to determine whose feeds it show up in. I actually think that's the exact type of market maker that will emerge here, which is coin showed up on chain. I'm going to inspect its metadata in the content. I'm going to make an assessment of like, how viral do I think this content is going to be? And then where should that, how far will it go? And you can actually then make a trade based on that insight that you have.
What was the unlock? Have you heard of something called Yapster?
Yeah.
Isn't that kind of exactly what? So for listeners in the audience, I've only seen it. I didn't get accepted to the one point it was like a 300-person beta or something
Yeah,
like that. But
I made it into a couple rounds. It was fun.
good yeah. But the idea is that it's a social app, right? You sign up and you have to post something like 0.25 Sol or something like that at the time. Right. You get a certain amount of points, then you get shown successive rounds of memes. And you get shown, say, 5 memes over the course, and you have 5 seconds or 10 seconds to allocate points, and you're trying to allocate points based on what you think other people in the round will also allocate points to.
Yeah.
And then you kind of go through successive rounds, and the people that are successful at allocating points to what everyone else does, you stay longer and longer, and you get rewarded for that. And then at the end, I think the people that you can launch the most highly rated meme.
Yeah, everyone gets airdropped some of the meme that was chosen proportional to how well you did during the rounds. Yeah, it was that mechanism.
This is one of the big unlocks for me, is like that looks a lot like a social media feed. And
exactly.
That's kind of what you're describing here as well, with these ML engineers who are very good at guessing what to show people and how long people are going to look at it and that sort of thing.
And then where I think that starts to play out is actually a marketplace for feeds, which is given. So it's like, if I'm getting really good at predicting that, well, why would I not actually just have a website that is serving a feed to these users? And because it's not like one of the big unbundlings that happens in crypto social versus traditional social is obviously like Instagram has a monopoly on all the content.
Yeah.
They're the only ones that can access it, and they're the only ones that can construct a feed on it because that database of content is not accessible.
Yeah.
In crypto, it's completely blown open. Every single coin, every single piece of content is available to everyone. So now it's like, well, imagine 10 different websites with 10 different feed algorithms. There's now competition for who can actually show me the most relevant things to me. And then the business model for the feed providers is like, you have to find things that people are willing and like enjoy enough that they just want to buy it.
Yeah.
There's also that you can come at it from the speculative side, but I think that'll probably stay mostly private, which is like, I don't think you would open that up. Like that's alpha. So your job will be, of all the available information and content on the internet, what is the most relevant to the user that is on my website right now, such that they're going to like it so much they want to buy it to support that content or buy the content or support the creator, basically. Yeah.
This is so maybe to zoom back out here for a second, I think one of the things that is very appealing about this to me is, one, people have to remember, like, a lot of people talk about NFTs like they're dead, right? And I think that people are kind of unfair in terms of their expectations around timing and how long it takes to build things out. Bitcoin now has product market fit. It's 17 years old. It took a long time, right? And many people famously in the media have proclaimed Bitcoin dead. There's a whole website dedicated to this. And it went through different rounds of P2P cash, which is the original vision. And now it's this digital gold. DeFi is another good example of it. Took off. There was a massive amount of speculative fervor around it. Most of those coins have not reached new all-time highs. I think the vast majority of them haven't actually. And now you're just starting to see some of those real thorny problems get solved, and everyone's building out stable coins, and like DeFi looks prime for a resurgence here. And same thing with NFTs, right? There was an initial speculative fervor, which I think tells you that there's something real here. Yeah. But then, what's been so great about this interview is sort of figuring out the success of, okay, this is what worked, this is what didn't work, and coming towards this new idea of on-chain social, which doesn't look very... I've never really liked the on-chain social where it's like, okay, this is exactly like Twitter, but it's decentralized on the back end. Like,
I don't think that's compelling enough of a
no one cares about that.
What I would say is that, like, so I would say tokenized images are not dead. NFTs might be for that use case though. Because like we like categorically moved away from NFTs as like part of this model. And
I'll even still debate that. I think
it'll always exist. And I think there will be increasing value. But I view it as kind of like, I think the NFT market, or like the form factors that I think are durable and will stick around, will continue to resemble like the top 1% art market that does exist. Which is like, if you compare NFTs, like the digital art world, to the real art market, there's so much headroom for growth. But I think there are order of magnitude larger opportunities for this larger idea of tokenizing just all content. And tokenizing images that had a lot of overlap with NFTs that is like breaking away and moving away.
I completely agree with that, because I mean, on the art market side of things, what has always made sense to me is I sort of view these PFPs, that the PFP NFT meta made a lot of sense to me. You spend $1,000 or sorry, like $20,000 on a really nice like Xenia suit or something like that. It feels more relevant to me in this age to spend money on a profile picture that you think is really cool and everyone's going to see,
Yeah, I think
1,000.
watches are probably a closer analogy.
I think
than
watches
suits,
are
yeah.
great.
Yeah.
Yeah, that's exactly right.
Yeah.
Well, yeah, this is super exciting. And you also have the launch. I saw, I guess last thing is the Zora meme coin. I saw that you guys are launching. Is that correct?
Yeah, so we're launching the official Zora coin. So we're tokenizing Zora at large as well.
Nice.
So that's going live in spring.
Awesome.
We just announced that in March, I think. So we're getting pretty close to that, which is going to be exciting.
Exciting, man.
Yeah. Cool.
Well, look, this has been a great conversation. This has been a huge. I've been yapping a lot of people's ears off about some of these
Nice.
ideas. So
Awesome.
It's been great to connect with you who's thought about it very deeply and are building something super exciting. If folks want to try out the Zora app or just follow you guys or find out more information, what's the best way to do that?
Yeah, I'd say go to our website, so zora.co,
Yeah.
and then Zora on the App Store, and then on Twitter, we're just Zora, Zora. So you can find us there.
Sweet.
Cool.
Jacob, this has been a ton of fun. We'll have to do it again. Thank you for being the first
Thanks for having
first
me on.
guest
This was
here.
great.
Yeah,
Yeah, it was a lot of
IRL.
fun.
This was really fun. Cool.
Perfect. Thank you.
All right, man. Yeah, take care.
Yeah.